Today's video, I want to break down my investment portfolio, show you guys what stock and index funds I'm currently invested in, and my overall plans for 2026 when it comes to what avenues I want to invest in. So, as always, this is not advice. Don't take it as such. It's just my thought process to achieve the goals I set for myself and what I want to achieve moving forward, especially through 2026. So, stay tuned. I wanted to share this now, especially because we just hit a new year. We just got into 2026, and whether it could be my viewers or future viewers may be interested in kind of getting their feet wet in the investment world, especially when it comes to like stocks, index funds, or just overall the market. So that's mostly the main reason why I wanted to do this video today. And then just overall, like I said, just kind of break down my longer term mindset. This is not just really applying to the year 2026. It applied to the last three and a half years. We'll apply for 2026, and then we'll lead further, to further years. So with that being said, anyone who may take this as advice or may like learn something from this or may take what I said, do their own research. I always recommend, I always tell you guys, don't take my word for 100%. Take what I say and then go do your research on it. See if I make sense, see if I'm wrong, see if I'm correct, and just kind of play along with it, just to, better inform yourself, better educate yourself. Because, if you're not educated when it comes to investing and you're only taking my word for it, you can mess something up. I can mess something up. And overall, just do your due diligence. Take care of yourself. Do your own research, because no one's going to care about your money as much as yourself. So with that said, guys, I'm just kind of going to jump into it. So I would say, starting off investing, I wasn't very sure what I wanted to do, or I guess I thought always, oh yeah, well, I'm gonna buy just one stock or like a group of stocks, whether it be like I'm gonna buy Walmart, or I'm gonna buy Target, or I'm gonna buy Best Buy stocks, individual stocks. I guess is what I'm getting at here. And I was always a little nervous. I was like, oh well, then I feel like I'm gonna have to be like day trading every day. Like, oh, I'm gonna have to watch the financial reports or the annual reports of Best Buy and Walmart. And if they announce something really great, I should buy a bunch of stock quickly before the price goes up. Or if they mention that they had a cyber incident and a lot of their data got leaked, people's the relationship to the customers is going to go down. People are going to trust them less. Maybe their stock's going to drop. So I didn't really want to get into that. So this video, I'm really not going to mention individual stocks. It's one reason I don't really have it in my portfolio, and two, I don't plan on it, and I also just don't recommend it to starters or new people into investing. What I will recommend to you guys is ETFs, or just what I like to call them, what a lot of people like to call them, index funds. And what index funds are is it's typically just a group of companies, and it's in one, I guess we'll just call it one index fund. So like instead of buying ticker symbol, like Walmart's ticker symbol for stock, you'll buy an index fund, which will have its own ticker symbol, and it pretty much includes all the companies grouped together. So yeah, that's pretty much how that works. I'll probably throw it on screen here, just so you guys have a reference. But I personally use Fidelity for my investment branch or my investment company of choice. I like them. Fees are pretty low. The user interface is kind of easy to follow. It's not very complicated, or it's not kind of overwhelming to a new person. So it's kind of easier to navigate the platform. Just kind of jumping into what ETFs I have, or what index funds I use. For Fidelity, it's all different ticker symbols. Like if you use Vanguard or Charles Schwab or Fidelity, there will be different ticker symbols for each index fund. Like for example, for Fidelity's Total Market Index Fund, their ticker symbol is FXKAX, and that pretty much, like I said, just includes the total market stocks. So whether it's like 1,000 or 2,000 different companies, I believe. And like I said, that is unique to Fidelity, so keep that in mind there. And I'm also invested into Fidelity's S&P 500. So their version of that is FXAIX. I know it's a lot to remember. I mean, definitely just use Google. Google's your best friend here, especially if you're using Fidelity. Like I said, I recommend that. And just look up, oh, what is Fidelity's total market index fund, or what is Fidelity's S&P 500 fund, and these things will pop up. I also just have Charles Schwab company in there. I think it's just like ticker symbol SCHD. I have a little bit of CrowdStrike stock, and the only reason I bought that, kind of just going against my word of saying don't buy individual stocks, I actually bought that the day or two after, I think it was last year, or no, I think it was 2024, where they had the blue screen of death, or the CrowdStrike outage, the Windows outage, and the stock just absolutely plummeted. So I was like, oh man, I'm gonna buy some stock. So I think I bought $3,000 worth of stock, and seeing the price of it today, holy shit, I wish I bought more. I think I bought it at a low of like 270, 272, and then I think a month or two ago it hit a high of 504, 505. So just seeing how it bounced back, because I mean they're the biggest player in the game there, so they were going to bounce back. I mean, it was inevitable, but I didn't think it would jump like that. So, hindsight 2020, I wish, I can go back and buy more, but it is what it is. I'm glad I got in at all at a discounted rate, but little side rant over there. And then I just have some stock from a company I used to work at that IPO'd late last year. So, I had some stock ready to, like I said, transfer over when the company went public. So I have a little bit of that in my portfolio, but everything else, like I said, guys, is in index funds. It's the least riskiest. Typical growth is like 8 to 10% over the last couple decades, maybe even century at this point. So statistically, it always goes up. I mean, obviously, we'll have a bear market for a couple weeks, couple months at a time. I don't think I've ever experienced that, or were invested in it at the time, like, especially during COVID. It was really low lows. Wish I, invested back then. I definitely would have made a lot of money there when it bounced back. But yeah, I think they're just easier to maintain. You're not having to look at them at a day-to-day basis, like, oh man, the stock went up a couple dollars, or oh, Walmart, introduced something, because Walmart is mixed with, for the S&P 500 stock at least, it's mixed with 499 other companies. So it's not going to fluctuate like a crazy amount. So you don't have to worry about day trading, to make that extra $1,000 when you sell the stock, or whatever the case is. And like I said, growth 8 to 10% over the last couple decades. It constantly will go up. Obviously, like I said, there will be bear markets at some points, weeks at a time, months at a time. But, as history has shown, it constantly goes up. So get it now. Maybe you're wishing, oh man, I wish I started last year when prices were lower. Sure, I think everybody does, but the next best time to invest is today. So don't wait till tomorrow. Dabble in it a little bit. Get your feet wet. Like I said, do your research on the index funds that I'm recommending. Maybe you want a more tech focused index fund, or maybe you want a more dividend driven index fund. So yeah, I mean you can argue, oh yeah, you're not living on the edge, or you're not you're not following the hype stock. I would agree with you there. I'm definitely not. I prefer boring, and I don't want to say slow. I don't think slow is a good word to describe. I'll just say boring and safe route. I can risk a little more, out of the market, whether it be investing into real estate, investing into a side hustle or maybe a company I want to create, I could be a little more risky there. But I always want to be able to fall back on my investments in the market, and this is where those safe index funds kind of kind of secure my position. Because at the end of the day, if I continually put in $1,000 a month, let's say, in my market index funds, even if everything else fails, even if I lose my job or I never make more money than I currently do today, 30 years from now, I'm making the same amount of money. I'm in the same place. I don't level up my skills, my knowledge, I guess you can say. If I continually invest money per month, if all else fails, by the time I'm ready to retire, which is 60, or I guess you can say when you're able to take money out of these accounts, I'll be a multimillionaire based on, also the adjusted rate for inflation. So the adjusted interest rate for inflation. So if you want to use 10% being the annual interest rate for these index funds, I typically take 3% out for just inflation over the years. So at a 7% interest rate, when I look at the numbers, by the age 60, I'll be a multimillionaire. So if all else fails, I'll have this money to fall back on. So keep that in mind. With that, you may kind of motivate yourself to try new things, try new avenues. Try to get a new job or try new business ventures. If you are consistently investing on the side in the market, you just kind of have that little buffer, little buffer on the side, knowing like, hey, if all else fails, if I go bankrupt at this job, if I continually can scrape together $500, $1,000 a month to invest, by the time I'm 60, I'll be taken care of regardless. So definitely a good mindset to have there. Definitely a good, like I said, safety net if all else fails in the background. I think that's pretty much it for tonight's video. Throughout the video, I will probably provide just little snippets on the video of these different ticker symbols for Fidelity. I don't really know any of the ticker symbols for the other investment companies like Vanguard or Charles Schwab. So if you prefer to invest in those, or if you already have an account in those for like a company 401k or whatnot, just Google it. Just Google like a Vanguard's index fund for the S&P 500, and it'll provide the ticker symbol. You can kind of do your research, ask ChatGPT. ChatGPT will spit it out for you. Yeah, I think overall, like I said, investing like this, investing in index funds, not individual stocks, it just helps me sleep at night. It's where I avoid the risk taking. I can take risks in other avenues, getting a new job or starting a new business venture, starting a new side hustle, side income. So yeah, I think that's it, guys. I think I'm done rambling for tonight. Yeah, as always, hope you enjoyed the video, and as always, the lunch table out.